Well, we had the Business Daily this week report that Kenya's political risk profile might be downgraded in the coming months following the ICC's investigation or decision to allow its prosecutor to start investigations into the post-election violence back in 2008. How are you reading developments there and the impact it's set to have on investor sentiment?
Thank you very much, Alishia, and I'm really glad to be here. That's an excellent analysis of our market that you've made there. Looking at the macroeconomic situation that you're operating in, especially looking at the political scenario in terms of our market, especially noting that in 2007 we had quite a hit in terms of our markets because of what happened in the political arena. Noting that we are seeing a bit of progress, though still not very substantial. It's still welcome in terms of performance, and as of now we are seeing that our market has been able to factor in a lot of that in terms of how it performs. And as of now, we are still looking at more value investing as opposed to people really looking at how the political landscape is going to look.
Well, locals are really starting to dominate things at the bourse in terms of activity, but where it was earnings expectations fueling a lot of that drive on the bourse, what do you see driving things once things fizzle out on the earnings front?
Thank you very much. That's another very good observation. Basically, we saw a lot of local interest in the market, especially over the last 1-2 months, basically because of the corporate actions that were coming in on the financial sector. And as of now, as we are looking at going forward, basically, you're going to see a bit of a shift, just as you observed there. We are seeing a bit of a shift into the commercial sector because those are the corporate actions that are being expected within the next few months. And you're seeing investors beginning to take their positions on counters like Safaricom as well as Kenya Airways, who just closed their year ends a few days ago.
Yeah, well, we still have numbers continuing to trickle in. Eaagads announced results for the year ending the 31st of December 2009, and we saw net profit down 60% and earnings per share down by the same margin as well. What are your overall analysis of the numbers and the major pressure points to the business, because the market certainly didn't react too nicely to those numbers yesterday?
Thank you very much, Alishia. That's another very good observation. Basically, looking at how the agricultural stocks have been performing in our market, especially over the last recent months, we've been seeing a lot of interest in the agricultural stocks, especially Eaagads, and looking at Limuru Tea and several others, which went up significantly, basically because most of the investors were expecting fairly good results, especially looking at how agricultural prices in terms of the foreign markets were performing, especially last year. But looking at how the results came out, especially for Eaagads in particular, a double-digit drop in the profitability is significant in terms of the market, and looking at how investors are beginning to take up, we're seeing a lot of correction, and so we're seeing the price really dipping, and the pressure points for some of these stocks mainly has been foreign exchange fluctuations in terms of the market, as well as output, which had definitely been affected by the drought that we're experiencing. But looking forward, definitely some of these stocks are very promising.
Well, just as significant as a double-digit drop is a triple-digit increase, and that's exactly what we saw come to the fore when it came to Limuru Tea. That company seeing profit after tax up over 200%, earnings per share up by a similar margin as well. The market had to have been impressed with those numbers.
Yes, thank you very much. That's a good observation. Basically, Limuru Tea has been one of the stocks which has been developing a lot of interest, mainly because of their dividend payout, which is fairly good, and also in terms of the pricing, which, well, it has been operating at a bit of the higher end, which makes it a bit unaffordable at the moment. But definitely in terms of how it performs, they have been able to really sustain their performance, which is very welcome for the market. And so because of that, you're going to still expect a lot of demand on that counter.
Well, certainly those higher tea prices through the year has helped in terms of boosting the company's profits, but now with production levels ramping up globally, I mean, how much of a challenge do you see this being, where we've got, your other markets like Pakistan, for example, increasing its export drive as well?
Well, looking at even the global economics front, definitely there's been rains all over. We are seeing it's not just Kenya which is benefiting from that, and definitely you're going to have a bit of an output pressure in terms of the market as well as the prices, and definitely that will affect the bottom line of some of these counters. And so we are hoping that they're going to be a bit proactive in terms of looking for other markets, for instance, trying to take advantage of other significant markets which they can be still sell. And also in terms of our product packaging as well as output, we definitely need to see how we can really try to differentiate our products so that we can be able to still get a niche in terms of our placement in the global economic market.
Very quickly, before we go, just looking at some news that's made headlines this morning. Samuel, we've seen Uchumi, which was recently, of course, lifted out of receivership, announcing its intention to cross-list on all of East Africa's bourses. What's been market reaction to that news, considering that it's just recently been lifted out of this receivership and only recently made progress in terms of its bottom line as well.
Thank you very much for that observation. Well, Uchumi can be positioned right now in terms of the commercial sector, and that's one of the sectors that we're really looking at in terms of performance, noting that we are being told that the economy is going to grow by around 4.5%, which is very welcome, and you're going to see a lot of growth in terms of such a front. I think in terms of getting back into the market, Uchumi is very well positioned because, as you noted, their bottom line has really improved significantly, and also in terms of cross-listing, definitely they're beginning to create a lot of demand in terms of the share, and so because of that, we are going to expect a lot of demand by the time they're going to be relisted, and we are hoping that Uchumi comes back because it's one of the counters which had developed a lot of loyalty in the market, and we are hoping that it's going to still continue bringing in the retail investors.